Wall Street is on fire. The energy is palpable, the excitement contagious. You can feel the buzz in the air as fortunes are being made. Record highs everywhere. The S&P 500 soaring to unprecedented levels, defying expectations and rewriting the rules. Dow charging past milestone after milestone, a testament to the resilience and strength of American industry. And Nasdaq are smashing through ceilings. Innovation is the name of the game, and the tech sector is leading the charge. The bears are nowhere to be seen. The bulls are charging. They're not just walking, they're running, fueled by optimism and opportunity. This isn't luck. It's the result of powerful forces, a confluence of factors aligning to create this extraordinary moment. A trade truce, easing global tensions and opening up new avenues for growth and collaboration. Tech innovation, driving productivity, creating new markets, and transforming the way we live and work. And unstoppable consumer spending. Americans are opening their wallets, confident in the future and eager to spend. Greed has replaced fear, and it's driving prices higher. The fear of missing out is a powerful motivator in this market. You have to be in it to win it, and right now, winners are everywhere. Fortunes are being made, and the opportunities seem endless. Some skeptics whisper about bubbles and overvaluations. They caution about the risks of irrational exuberance. But look at the earnings, look at the innovation. The numbers speak for themselves, and the future looks bright. Don't bet against American ingenuity. The spirit of innovation and entrepreneurship is alive and well in the United States. This is about the fundamental strength of the U.S. economy and its world-beating companies. These are the companies that are shaping the future. So buckle up. We're breaking down this complex landscape, providing you with the insights you need to navigate this exciting market. The catalysts, the key drivers behind this bull market, and the factors that are propelling stocks higher. The superstars, the companies that are leading the charge and delivering exceptional returns for investors. And the risks. Because every opportunity comes with potential pitfalls, and it's important to be aware of them. We'll dissect the Trump-China trade deal and what it means for your portfolio. Understanding the implications of this agreement is crucial for making informed investment decisions. We'll dive into the AI stocks leading this charge. Artificial intelligence is revolutionizing industries, and these companies are at the forefront. And we'll hear from both bulls and bears for a full 360-degree view. Getting perspectives from both sides is essential for making sound judgments. This is your playbook for navigating a market that's making history. Equip yourself with the knowledge and strategies you need to succeed. Don't be left behind. The ride is just getting started. This is an opportunity to build wealth and secure your financial future. Let's get to the heart of what's driving this unstoppable bull. Let's uncover the secrets behind this market surge. The market's making history. Are you ready? Let's go. Let's dive in and explore the opportunities that await. Let's break down the big three indices, the titans of the stock market. We're talking about the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite. These aren't just numbers, they're barometers of economic health, indicators of investor sentiment, and signals of future growth potential. Understanding them is key to navigating the financial landscape. The S&P 500, America's economic engine, representing a broad spectrum of the U.S. economy. It's a weighted index of 500 of the largest publicly traded companies in the United States, offering a comprehensive view of the market's overall performance. When it hits new highs, it means strength across the board. It signifies that a significant portion of the American economy is thriving, reflecting positive earnings, strong consumer demand, and overall business confidence. From tech to healthcare, every sector is firing, contributing to the index's upward momentum. This widespread participation is a sign of a healthy and sustainable market rally. The Dow Jones, 30 blue-chip giants, the stalwarts of American industry. These are well-established, financially sound companies with a long history of consistent performance. When it crosses milestones, it's headline news and a confidence boost for Main Street. It reinforces the perception of economic stability and inspires trust in the market's long-term prospects. The Dow's highs give everyday investors courage to join the rally, encouraging them to participate in the market's gains and build their financial futures. It's a powerful psychological effect. And the Nasdaq, the home of innovation, a hub for technology and growth companies. It's where you'll find the companies that are shaping the future. Apple, Amazon, and the AI leaders are pushing it to new heights, driving innovation and transforming industries. These companies are at the forefront of technological advancement. A record Nasdaq means investors are betting big on the future, allocating capital to companies with high growth potential and disruptive technologies. It's a vote of confidence in the power of innovation. The simultaneous surge of all three indices is a rare, powerful signal, indicating a broad-based market rally with widespread participation. It's a sign that the market's strength is not limited to a single sector or industry. It's not just one sector. It's a synchronized market boom, with multiple sectors contributing to the overall gains. This coordinated movement suggests a strong underlying economic foundation. The S&P shows breadth, the Dow gives psychological validation, and the Nasdaq points to future growth. When all three are breaking records, you have to respect the momentum. It's a clear indication that the market is in a strong uptrend, driven by positive economic forces and investor optimism. This isn't a time for fear, it's a time to recognize the strength and resilience of the US market. The trifecta is here. Are you paying attention? Let's see what's fueling this rally. What are the underlying factors that are driving this impressive market performance? The story gets even bigger. There's more to uncover as we delve deeper into the dynamics of this market surge. For 2 long years, the global economy held its breath, waiting, watching, and wondering what the next headline would bring. The US-China trade war cast a long, dark shadow over Wall Street, creating an atmosphere of anxiety and unease. Investors were on edge, unsure of what the future held. Every tariff announcement, every late-night tweet, rattled markets, sending shockwaves through the financial system. The uncertainty was palpable. The trade war disrupted business plans, forcing companies to rethink their strategies and supply chains. Long-term investments were put on hold, and the future seemed uncertain. Then, finally, came the Phase 1 trade deal, a glimmer of hope in a sea of uncertainty. It was a ceasefire, not a comprehensive solution to all the underlying issues, but a welcome pause in the escalating conflict. More importantly, it was a crucial step back from the brink, a sign that cooler heads might prevail. As part of the agreement, China agreed to buy more US goods, particularly agricultural products, a boon for American farmers. In return, the US rolled back some of the tariffs it had imposed, easing the pressure on businesses and consumers. The deal restored a sense of predictability for major companies like Apple and Caterpillar, which had been particularly vulnerable to the trade war. This newfound stability allowed them to plan and invest again with greater confidence, knowing that the rules of the game were less likely to change overnight. Beyond the tangible economic effects, it was a massive psychological boost for the market, a sign that the worst might be over. The biggest headwind, the constant threat of escalating trade tensions, was finally gone, or at least significantly diminished. Investors could breathe again, knowing that the risk of a full-blown trade war had receded. The deal signaled to both sides and to the world that they preferred negotiation and compromise over confrontation and escalation. It wasn't just about tariffs and trade balances. It was about restoring a sense of global economic stability and predictability, which had been sorely lacking. And for a market that hates uncertainty more than almost anything else, this newfound clarity and stability was like rocket fuel, propelling stocks higher. The green light that investors had been waiting for, the signal that it was safe to get back into the market, had finally arrived after a long and arduous journey. The market's reaction was immediate and decisive, a clear indication of the pent-up demand that had been building for months. The fog of uncertainty that had been hanging over the market finally lifted, revealing a brighter and more promising landscape. Now, let's delve deeper and see exactly how this fragile truce ignited the market rally that followed. The bull market, which had been waiting in the wings, finally had its catalyst, the spark it needed to take off. So, with the stage set, let's turn the page and move on to the next chapter of this fascinating story. The ink was barely dry on the trade deal when Wall Street exploded higher. The market is forward-looking. It trades on the future, not the past. The deal replaced fear with stability and optimism. Sectors hit hardest by tariffs. Industrials, semiconductors soared overnight. Money managers rushed to buy back in, fueling a powerful rally. The ripple effect was global. Stable trade means growth for everyone. US multinationals suddenly saw brighter prospects abroad. The paralysis was broken. Investors could focus on earnings and innovation again. The trade truce unleashed pent-up energy. The bull market was off to the races. With uncertainty gone, the fundamentals took center stage. The rally had real fuel. Now let's talk about the companies leading the charge. Enter the kings of AI. Time to talk tech, specifically artificial intelligence. AI is here, and it's creating fortunes. At the center is NVIDIA, the king of AI hardware. Once just a gaming chip maker, NVIDIA's GPUs now power the AI revolution. Their secret? Building not just chips but an entire ecosystem, hardware and software. Every major cloud provider is loading up on NVIDIA's GPUs to meet surging AI demand. Their chips are the backbone for everything from language models to self-driving cars. NVIDIA's earnings are off the charts and their dominance is unmatched. Owning NVIDIA is like owning a piece of the internet in its early days. As long as AI grows, NVIDIA leads. The AI gold rush has a king, and it's NVIDIA. But they're not alone. Let's look at the other AI titans. NVIDIA powers the revolution, but giants like Microsoft and Tesla are building the future. Microsoft has transformed into a cloud and AI powerhouse. Their partnership with OpenAI brings cutting-edge tech into everything from Bing to Office. AI is now woven into daily business tools, boosting productivity and locking users into Microsoft's ecosystem. They're monetizing AI at a massive scale. Then there's Tesla, the ultimate innovator. Tesla isn't just a car company, it's an AI company. Every Tesla gathers data to train self-driving algorithms, giving them a huge edge. Tesla's ambitions go beyond cars. Think humanoid robots and custom AI chips. Investors betting on Tesla are betting on AI disrupting entire industries. These companies aren't just riding the AI wave, they're shaping it. The future is being built now. But is this rally for real? Both sides have strong arguments. The question, is this euphoria justified or a warning sign? Let's look at what could derail the rally.
For them, this is a time for caution.
Bears fear a recession could hit profits and stocks hard.
Rising delinquencies and slowing investment could signal trouble.
They worry about narrow market leadership and the delayed impact of past rate hikes.
Bears, though, see sky-high valuations and warn of a bubble.
Add a resilient US consumer and the bulls see more gains ahead.
With inflation cooling and the Fed pausing rate hikes, lower rates are a tailwind for stocks.
Bulls say we're in the early innings of a tech-driven boom, with AI fueling growth for years. Companies like NVIDIA and Microsoft are the new blue chips.
Time for the big debate, bulls versus bears. Smart investors watch the data and stay nimble. This rally isn't invincible. The risks are real, but so are the opportunities. The next move is yours. Are you ready for what's next? Let's wrap it up. The decision is in your hands. What will you do?
The higher you fly, the harder you fall.
Valuations are sky high. If AI hype fades or a giant like NVIDIA stumbles, stocks could tumble.
Economic recession is always a risk. If job losses mount and earnings fall, the bull run could end fast.
Geopolitics is another wild card. Tensions with China or global conflicts could shatter market confidence.
The biggest threat? A resurgence of inflation. If prices spike, the Fed could hike rates again. Bad news for stocks.
Even in a bull market, risks lurk. There you have it. The playbook for a historic market moment. The S&P, Dow, and Nasdaq are at new highs, powered by a trade truce and an AI revolution. Companies like NVIDIA, Microsoft, and Tesla are leading the charge, reshaping industries and creating massive value. But risks remain: inflation, geopolitics, and high valuations. Bulls see endless growth, bears warn of a bubble. The path forward is never straight. The ultimate question, what's your move? Do you ride the bull or play it safe? There's no single right answer. You've got the facts. Now make the call. Will this bull keep running, or is it about to run out of steam? The choice is yours.